Hey everybody, this is DayTraderRockStar, and this is a very special video. Today we're going to be doing a just an outline of what we look for during an average market day, especially on day trading radio. You see me, broadcasting each and every day live, and we make these squares and circles and patterns and stuff. But I want to just kind of go over in a video exactly what we're looking for and how we break down an average day in the markets. What am I looking for? What are high probability setups on a intraday chart? Now, we're kind of standardized in following the S&P each day, but of course you have the other indexes that move along, and there's easily you could transfer anything said on the ES over to the YM, to the Nasdaq, the NQ, the crude, anything. The techniques, the indicators work across all spectrums. But we're going to use the ES as an example and the S&P 500 as an example. The true methodology is based off of multiple indicators, which I've come over time calling the 5 indicator setup, in which gradually morphed into a what's called the high probability setup methodology. And the high probability setup methodology is taking what works in the market constantly and consistently, and watching for that level, marking it out, and acting on it. And there's certain patterns in the market. There's certain indicators that we pay attention to, and these all work great alone. But when they all line up together, they kind of come into a rotation, and they all line up exactly the same spot. That becomes a high probability setup, and that's what we concentrate on. That's what the HPS is about. Multiple indicators aligning themselves for a market move. Now, this could be to the buy side or to the sell side, short, long. It's just important to wait for those signals. And this is great because during the market, you're sitting in front of those computers, and you want to push a button, you want to get into a trade. But as I show you here, and I'm just going to go back, this is something that we do live. All these squares and all these circles are placed here live each day. So it's not like I'm pointing out this point here. We're pointing it out as it's live, and you actually see the reaction. So when you can go back and do this each and every day and see these reactions to the levels, and sometimes you will push a little bit higher, sometimes it'll break down, but there's usually a reason behind that also. We'll discuss that. But overall, I'm going to just show you some basic patterns, basic indicators that are lining up just on an average day. And for the average day, we're just going to actually look at the last 2 days. And I wouldn't call this much of an average week because of if you happen to be watching this video in the future, this is making this video during the Greek crisis, where they're deciding if they're going to stay in the EU or not, stay in the euro or not, and it's really been moving the markets around aggressively. But the fact is, when we put out our market radar, which is an update on the markets, the patterns have been playing out perfectly. The indicators have been pointing to the biggest moves in the market, and that is with the market news and the weakness in the market based off of this Greek crisis. So what we're looking at here on the first screen is just a chart of the ES mini futures contract on a 1-minute time frame, and this is going out on Monday. And what I usually do is have this up on the board each Monday. Even though we trade a lot of stocks, we trade mostly stocks. I trade futures, stocks, options. We'd like to use the S&P just as a gauge for the overall markets. And so we kind of come back to this because a lot of futures traders out there trade the ES. I have a band of 3 stochastic indicators underneath us. Each one is set at a different time frame. All that information is on the site. I won't go into that in detail right now, but we have a membership forum and everything that really points out and describes all the indicators and how to use them. But I want to go over a few of them today. Let's go back. Let's pretend we're starting off on the market open here. Now, as we start off on the day, we have our pre-market trade, the overnight trade. The futures are moving. Europe opens up here in the morning at 3 o'clock. We also get some other, we got Asia opening up overnight, and we get this overnight trade. But we're really going to concern ourselves with the trade that happens at 9:30. Even though these indicators do play out overnight also, the real volume starts to come in after 8 o'clock, and at 9:30, when the gates open up, it's all hell breaks loose, and that's where we go. We start to trade. Out of the gate here on Monday, actually one of the best uh, indicators that I go by, a methodology is called the Lane Divergence, and it's the bread and butter of what I trade, and it's not something that you're going to see every day, but when you do see it, it has a very high probability of working out. Now I have tons of information on how to put it together and what it means and stuff. But basically, we're looking at a lower low here in the buy signal. We're looking at the lower low in the price and the higher low in the stochastic and the fast rotation here. Also on the slow, we actually see it too. This is a very pure one on the 1 minute chart. Now the 1 minute chart and the 5 minute chart and the 60-minute chart are our go-to charts. So if we see this type of setup on any of those charts, that's a valid signal. And usually a lane divergence is one of the strongest signal, if not the strongest signal, and that usually represents one of the biggest moves of the day. And you can see 9:30 on Monday, we actually had a lane divergence start right off in the day, and from that point on, we rallied all the way up here. We saw we had a little flag. Let's see, let's go back here. We had a little flag here, move, break out, and a push back up here. And at this point, we talk about what we call a triple threat, and that's when we have all three stochastics line up and we look for a reversal candle. In this case, this is the first half an hour of the trade. This is really a no trade zone because of the volatility. We want to let the market kind of get into a rhythm. So we usually wait until after about 10 o'clock to let things set up. But actually, you could actually see this actually ran up to about 10 o'clock, pulled back, chopped around. Then we flagged out 10:30, 10:45, and then 10:45 we started getting overbought on multiple time frames. And the other thing I want to actually point to, because that's not the whole story. As we look at that 60-minute, or as we look at the 1 minute chart, we always cross-reference with the 5 minute cash. And now you can use the 5 minute ES future chart too. I just prefer using the cash chart because it's just something I really enjoy watching, and it's a clear signal to me. So the day we're looking at here is July 6th, and we see this nice run up here. So what I do normally in the morning is I'll refer back to that 5 minute cash chart, and here we have in the morning we have a nice run up here, and I've had a trend line up here. Now this trend line is just established off of this trend line, so we're not going to count that trend line. I'm not going to use that as even though we had this little pivot area here, right here. A pivot area is considered a change of direction. All right, so we had a pivot area here based off the time frame that we're looking at. So this is a 5 minute pivot. And this is, so we have two pivot areas. So that trend line here kind of established here, and we actually came back up to it and touched it. So it actually is an indicator. But the key here is this rotation on the 5 minute stochastic, the 14.3 stochastic indicator here. We get overbought on this quickly. And the same time we get overbought, we push up against that trend line. So as this is overbought, the trend line is there. And if we go back here to the 1 minute chart, we can actually see we have a triple thread here, but there's no reversal candle to kind of qualify that. But the triple thread alone is usually a good indication that, hey, be careful, take profits into strength, prepare for a pullback. But this is a little bit harder because the time frame is 1 minute, but the 5 minute here ties it all together. And when you have the 5 minute and the 1 minute here lining up, you have a good chance of rotation back down. And what happened is we did rotate back down. We dropped back down, and let's just pretend we're just going through the day. So we actually break back down, and we come back down until we see a little pivot area start to move back up. And once we establish that pivot, I'll take that initial trend line, and I'll take this lower trend line, and I'll make a parallel trend line. And if it works out, it works out. If it doesn't, it doesn't. But I want to make sure I identify those pivots. And there's a little pivot here that breaks and comes back and chops around. But what I'm watching here on the 1 minute chart is that from that overbought level, we come back down. The fast stochastics rotate back down. The slow stochastics, the medium stochastics takes their time to get back down, and the slow stochastics really take their time to get back down. And it's not until they all of them get oversold here that we really see a bounce here. So right here, and again, normally when you see and watch the show, and the show is on every day, I'll mark that area off with a circle and say, all right, this is what we call an HPS, triple threat to the upside. And it's a 5 minute kicker on that. And when we talk about that 5 minute kicker, we're talking about that 5 minute rotation right back here again. So what happened here is we had that 5-minute oversold level, and we had that 1-minute oversold triple threat. And it gives us a little information there. It gave us a little information. And what's so cool about this, and you're going to see it, is that we watch this so intensely that we know that normally you could get a nice rotation up here, and it could be a nice steady grind up here, a nice return, or you could get a fast rotation. You don't get much of a bounce here, and that's an indicator in itself. In this case, what happens is, and this is very, very key in being successful in the market, is if you have to have an entry strategy, and our entry strategies are defined with our HPS setups. It's either the triple threat, we have the 5-minute setup, we have the Lane Divergence, we have the wedge patterns, we have the other setups, the rotation setups, we have the stochastic bounces. They're all listed. There's about 10 HPS setups on the forum. But that's what we're looking for. We're looking for these on that 1-minute chart. So in this case, we had the triple threat and we had the 5-minute setup. But that is our entry criteria. So, all right, yeah. What is our exit criteria? Everything on the 1-minute chart has to be defined as a short-term trade, unless that 5-minute is really, you're looking at it as a bigger trade. But this game is about getting some really good opportunities in the market, but those opportunities only last, a short amount of time when you really start to see how these indicators work. I mean, you can trade the bigger indicators, and sometimes that's even better. The longer time frame indicators, the 60-minute chart, and do the same thing. But this, all you have to do is transfer the same strategy over to those time frames. But in this case, what we're doing is we're looking at that rotation back up here. And once that rotates back up above 80, that is your first clue of things maybe, and we haven't really established a trend. But if the market is going to be in a trend day, or we have some news, and this week we've had a lot of news, that rotation might mean something. If we're very strong on the downside, a fast rotation should be sold into. So seeing that fast rotation off of this little buy signal, that's telling you we didn't get a big move. It rotated very fast. Maybe we got a few, maybe you got a point and a half of 6 to 8 ticks on this move up. And that's good for a scalper. That's good, but it's also telling you, hey, we're extended here. And what we're seeing here, let's go back down here. And this is a real clue to what's happening here. And I wanted to show you this. This is a very good signal here. You see how we rotated back down? We started off here, we got overbought, and this was our sell signal. We pulled back until we got oversold, and that was our buy signal, combined with that triple threat. And we started moving back up. We actually held on here, and then we started moving back up. And we didn't move up too fast. I mean, really, we didn't move up too fast. But look how fast we rotated back into an oversold level. That right there is telling you, wait, there's no strength in this market. Normally, if you're going to get that type of strength with the stochastics, you want to get that moving back up. You can see that we're holding underneath the 50-period moving average, barely getting through the 20. A big warning sign there. Getting overbought quickly on the 5-minute. If that happens, it's a gift for you. Seeing that sideways consolidation and that fast rotation, we call that a price divergence, price and stochastic divergence. Normally, you want to see a nice rotation, oversold, overbought with a nice move, a nice sold, overbought to oversold, nice move. Sideways move with a nice move up in the stochastics is a price divergence, and that is a short. So, again, that's all you have to look for. And here's your criteria for the short. Right here, you actually had a long, but you can see now that you start to break back down here. And you start to break back down after you start to get overbought here on the 5-minute and the triple threat setup again. Now you have a classic 1, 2, 3 pattern, and you can see us pulling back down. And again, we got oversold again. And we kind of grinded back up into overbought levels. And each time we got overbought on that fast rotation, because the trend has been down, we've been selling off into it. So one thing I always kind of throw out there is the trend is your friend, and having the wind in your sail is important. This is having the wind in your sail. The concept of having the wind is being with the trend. The most of momentum, and this is a momentum indicator, is getting overbought, pulling back. You can see the momentum here is starting to kind of flatline down here. We're staying real low down here. We're not really breaking back above 50. The fast one's really going to be your tradable indicator in a trend day. So if you established a really strong trend day, in this case maybe a downtrend, you want to concentrate each time it gets overbought. So you establish a downtrend, you look at, you're going to have a better success on trading one side of the market. It's hard to go against a downtrend. Trying to capture those bounces, they will come. They will, you will be able to get triple threat bounces and stuff, but you have to be fast and you have to understand you can't guess this market. You have to have your exit strategy defined. And your exit strategy is that rotation. There's no other reason why to hold on to it. There isn't. In this environment, when you have a trend down day and you're holding back on that 50-period moving average and the 20-period moving average, you get a fast rotation back up there. You have to just say, hey, that's my exit signal. 2 ticks, 3 ticks, 10 ticks. I don't care what you get. Once you get up there, your odds are going to start to, especially if you have a trend day, you're going to start to pull back. Now, you will have, there will be times when you get down to a channel, and we call that channel kind of getting a little mature channel, we're going to start to see other signals. Here we have what we call lane divergence. The lane divergence is where we make a lower low and a higher low. A lower low on the 1 minute and a higher low. But what else do we have? We have a trend line underneath us. We have a huge trend line underneath us. And I want to just zoom out here. And this trend line went back to that Sunday gap down. It came back to Monday low, and we just touched it. And it was something that we talked about it today. To see a lane divergence and a rise in trend line like that becomes what we call a high probability setup. First of all, the lane divergence alone is probably the best setup that we have on the HPF methodology. And it usually, when you establish a channel like this and you get a lane divergence inside that channel, that usually represents the bottom of the channel, and from that lane divergence you usually get a channel breakout. You hear me talk about it all the time. I show it to you, and that's it. And with that 1 minute chart, even though we had the lane divergence, you could have took it off here as you rotated back up, and if you did, you're still, even though it moved higher later on, you made the right choice. Each one of these signals have given you short-term setups. Now let's take a look at this. 245. Let's go back to the cash chart here. 245. Let me make sure I got the right day on here, because I'm way ahead of myself. The 6th, yeah, 245 to pull back. And this is really when we started to change direction between 245 and 3 o'clock. So I'm going to go back here now. 245 and 3 o'clock, right about here is where we changed. So we're oversold on the 5 minute, which is key. That's important. We start to turn back up. You have the wind in your sail to the upside. So when you see this signal here and you're just starting to move, you could, honestly make a logical call saying, all right, I want to, maybe, have a couple, maybe multiple contracts, take one or take a few contracts off into your first exit scenario, that overbought level, but keep the others on because that 5 minute is working in your favor now. So that 5 minute chart now has gone oversold, and we've moved up here on that 5 minute chart. We moved right up here until we got overbought, and from probably 2068 to 2070, which is a 200 period moving average, this was a nice move. Almost a 10-point move off the lows. And we rotated up there. We got a little further pushed up here, and again, we're starting to push into that time frame zone, that 3 o'clock to 4 o'clock time frame, especially in the news-driven market. You could actually start to see the market here kind of rally and push beyond levels. So we talk about the 9:30 to 10 o'clock trade, kind of be very cautious that you could get extended moves, and the same thing going into 3:30 to 4 o'clock, you get extended moves. You have imbalance orders, you have position closing, you have positions being put on. Sometimes you have
ES Tradeometer oversold.
Sometimes you have window dressing. It really depends. But that 3 o'clock, 3:30 level, I kind of back off of it. Let the markets play its games. The meat of the market is where we want. We want the established trend. We want to be able to say, all right, overbought, oversold. These are the big areas we want to trade. In some cases, you have a triple oversold level, but we break down. Now, why do we break down there? Well, we probably looked at to 115, a little after 115, which was right here. We were flatline, and I think there was some news out there that happened here. We did sell off pretty hard on that. And remember, there's no there's no perfect setup. But like you go to a casino and you know how to play blackjack or you play poker and stuff, you know there's a time to bet and there's time to sit on the sidelines. When you're dealing with a news-driven market and you see this little
NQ
breakdown
Tradeometer
from
oversold.
I'm sure that was some news coming out and we've kind of broke down through some levels. That's where we left off. But anyway, the real key here is that most of these setups will always pan out for you or give you an edge in the market, just like splitting your eights or taking a bigger bet on when you have a great hand. This is a great hand for us. A divergence is a great hand. A triple threat with a reversal is a great hand. A recognizable pattern is a great hand. And having multiple time frames all line up together is having great hands. So a combination of the 5 minute and the 1 minute, making sure they're all set up here. A 5 minute overbought with a triple threat to the sell side is a great signal to short. Same thing on the other side, unless you get a divergence. Here we have a price divergence sell signal. Here we had that oversold level, but this was a little bit harder because it was going into that 3 o'clock hour. And then we have the divergence here today. Actually, there was a beautiful divergence today. Look at this divergence on the 5 minute chart, and actually on the faster time frame back here, the 7 period time frame is really clear. And again, you can see that this was the biggest move of the day. And even if you took it off here, you see we kind of embedded ourselves. But the pullback here was another example of that price divergence. We have a nice move up. We kind of embedded to the upside. We kind of chopped around sideways. I always take a look at when we're oversold and we have that low portion of the, when we came into this area. And if we actually pull all the way back, but we never really break down through that low, we consider that divergence. And the divergence here, as you get us oversold, very clear. And then from that point on, we had that rally. So some great divergences showing up on today's market. A great example of what to look for when you're trading. For me and each and every day, it's very easy just to point out these levels. It's much harder sometimes to take them all, especially when there's news and there's other things out there and you're looking at everything. But we'll continue to bring you the levels. I think I bring you the best levels in the market, real time. Real time. Now, you might not trade futures, but this is important because if you're trading regular stocks, you also want to be in a position if you're saying, all right, I'm looking for a reversal in Amazon. I'm going to look for a reversal on Apple. Most likely you get a reversal, it happens with the markets. That's the odds are if Apple's moving higher, the markets or the NASDAQ, or at least the markets are moving higher. Same thing with a lot of other stocks. So it's important to know which way the direction the markets are going. Futures, this is fantastic. Even if you wanted to trade options on the SPY or just trade the SPY, you could trade the index ETFs. And using the index ETFs and using these signals work great. All right, they absolutely work great. I trade the SPY calls all the time, especially off of a divergence like this, and you get a nice move. This move right here, a couple calls from here to here, could give you a couple $100. And what is it going to cost you? Maybe, maybe $500. You could have a great trade based off of these indicators. You don't need a lot of money to do it. All right, so that's it for the little educational video on what to look for just during the market day. High probability setups, they come out every day. It's a matter of just waiting for them to set up. Anything else is kind of a gamble, but we do mark them off. I mark them off every single day. If you want to know where the lane divergences are, if you want to know where the triple threats are, you have a very good chance of seeing them here on Day Trading Radio, and they'll be live right for you. All right? Have a great day. We'll see you in the markets tomorrow, and I'll see you every day in the market.